studying your last two. I swim med when turned in. The styren down to mute. And can learn the pole that sunk he died.
Now that we understand why software should perform the calculations, the next question is, how do we actually use software to create better tax planning decisions? The answer is through a simple and repeatable planning methodology. This slide illustrates the 6-step process that professional advisors use to transform client information into informed decisions. Let's walk through each step. The process begins with gathering client facts. Before any calculations can be performed, we need a complete understanding of the client's situation. This includes family information, business details, income sources, investments, retirement plans, and personal goals. The quality of the planning process depends on the quality of the information collected at the beginning. Good inputs lead to good outputs. Once the facts are gathered, the next step is to enter the information into the software. This includes income information, expenses, corporate data, investments, and other relevant details. At this stage, we are simply building a digital representation of the client's financial situation. The third step is to create multiple scenarios. This is where the planning process becomes powerful. Instead of assuming what the best answer might be, we allow the software to model different possibilities. For example, one scenario may use salary, another may use dividends, a third may use a combination of both. Each scenario creates different results. The fourth step is to compare outcomes. Once the software generates the scenarios, we can compare them side by side. We can evaluate total tax costs, after-tax cash flow, CPP contributions, RRSP room, and the impact on long-term retirement planning. Instead of relying on assumptions, we now have objective information. The fifth step is to interpret the results. This is where the advisor adds value. The software provides the numbers, but the advisor explains what the numbers mean. The advisor identifies important differences, highlights trade-offs, and considers the future implications of each option. This step transforms information into insight. Finally, the sixth step is to discuss the results with the client. The advisor explains the options, answers questions, and helps the client understand how each strategy aligns with their goals. The client can then make an informed decision based on a clear understanding of the available choices. At the center of the slide is perhaps the most important message of all. Software does the math. The advisor does the thinking. This statement perfectly captures the relationship between technology and professional expertise. The software calculates. The advisor analyzes. The software models scenarios. The advisor interprets outcomes. And together they create better planning decisions. At the bottom of the slide, you can see the complete planning flow in action. Input, model, compare, explain, decide. This simple framework can be applied to almost any planning situation. And because it follows a consistent process, it helps advisors deliver better advice, create greater clarity, and support more informed client decisions. The key takeaway from this slide is that successful planning is not about finding answers immediately. It is about following a disciplined process. Gather facts, model alternatives, compare outcomes, interpret results, and help the client make the best decision for their unique circumstances. That is the foundation of effective tax planning. One of the biggest mistakes in tax planning is making recommendations based on assumptions. An advisor looks at a client's situation and thinks, maybe salary is best, maybe dividends are better, maybe a combination of both would work. But without testing those ideas, They are only guesses, and good planning should never be based on guesswork. This slide introduces one of the most important principles in professional tax planning. Build scenarios. Don't guess. On the left side of the slide, we see the guessing approach. The advisor is surrounded by uncertainty. Questions are everywhere. Maybe salary? Maybe dividends? Maybe both. There are assumptions, but no projections. Opinions, but no evidence. Without proper modeling, it becomes difficult to compare alternatives, difficult to explain recommendations, and difficult for clients to understand why one option may be better than another. Most importantly, guessing increases the risk of mistakes. And when planning decisions affect taxes, retirement savings, cash flow, and long-term wealth, mistakes can be expensive. Now look at the right side of the slide. This is the scenario modeling approach. Instead of guessing, we use software to test different possibilities. In this example, we have 3 scenarios. Scenario A uses a salary strategy. Scenario B uses a dividend strategy. Scenario C uses a hybrid strategy. Each scenario generates measurable results. We can see the impact on taxes, CPP contributions, RRSP room, available cash flow, and long-term retirement outcomes. Instead of asking, "What do we think will happen?" we can now ask, "What actually happens when we run the numbers?" This is a major shift in thinking. Planning becomes evidence-based rather than opinion-based. The comparison table at the bottom highlights another key advantage. All scenarios can be reviewed side by side. The client can immediately see the trade-offs. One option may produce lower taxes. Another may create more RRSP room. A third may provide a better balance between current cash flow and future retirement benefits. There is often no perfect answer, but scenario modeling allows us to clearly understand the consequences of each choice. This makes recommendations easier to explain and easier for clients to understand. The advisor is no longer asking the client to trust a guess. The advisor is showing the client actual projected outcomes. That creates confidence. It creates transparency. And it improves decision quality. The message on the right side of the slide captures the entire philosophy. Never assume. Model it and see what happens. This simple idea is one of the most powerful planning tools available to professional advisors. Because when you compare real scenarios instead of relying on assumptions, better information leads to better understanding. Better understanding leads to better decisions. And better decisions lead to better outcomes for clients. The key lesson from this slide is straightforward. Don't guess your client's future. Model it, compare it, and then choose the path that best aligns with the client's goals. This final slide brings together the entire planning methodology and shows how software and professional judgment work together to create better client decisions. Many people assume that good tax planning starts with tax calculations. But in reality, good tax planning starts with information. At the top of the slide, we see the raw client information entering the process. This includes family details, income information, corporate data, investment, personal goals, and retirement plans. These are the raw ingredients of planning. Without accurate information, even the most sophisticated software cannot produce useful results. Once the information is collected, it moves into the software analysis engine. This is where technology performs the heavy lifting. The software processes the data, runs multiple scenarios, generates forecasts, creates projections, and compares alternative strategies. Notice that this stage is focused entirely on calculations and analysis. The software is doing exactly what computers do best. It is turning raw data into useful information. But information alone is not enough. This brings us to the next stage: advisor interpretation. This is where professional expertise becomes valuable. The software can tell us what happened, but the advisor explains why it happened. The software can calculate tax differences, but the advisor explains the consequences. The software can generate projections, but the advisor helps the client understand how those projections affect their future. In the center of the slide, you can see several examples of the insights an advisor provides. They identify key tax differences. They evaluate cash flow implications. They discuss risk considerations. They explain retirement impacts. And they highlight the long-term wealth effects of different strategies. These are the conversations that clients truly value, because clients do not simply want information, they want understanding. Once the results have been interpreted, the process reaches its final stage: the informed client decision. The client now has multiple options available. Perhaps a salary strategy, perhaps a dividend strategy, or perhaps a hybrid approach. The important point is that the client is no longer making a decision based on assumptions or incomplete information. They are making a decision with clarity. They understand the consequences. They understand the trade-offs. And they understand how each option aligns with their personal goals. Notice the call-out boxes on each side of the slide. The software provides numbers, calculations, comparisons, and forecasts. The advisor provides context, explanation, judgment, communication, and guidance. Neither one replaces the other. Instead, they work together. Technology provides the information. Professional expertise provides the understanding. And together they create better decisions. The statement on the right side summarizes the entire philosophy. Software creates information. Advisors create understanding. Together they create better decisions. And those better decisions lead to the outcomes shown at the bottom of the slide: greater clarity, more confidence, stronger retirement planning, increased wealth, lower taxes, and ultimately, greater peace of mind. The most important lesson from this slide is that tax planning is not about software, and it is not about calculations. It is about helping clients make better decisions. Software provides the numbers. Advisors provide the insight. And when those two elements work together effectively, clients achieve better outcomes and greater financial success.